Today, we're going to go over a couple of different questions, but all of that really coming back down to the psychology of the markets and how to prepare for it. So yesterday, I put up a question on my Instagram asking you guys, like, what do you want us to talk about? So we got a couple of questions. The first one is, what do you think is the key to people overcoming psychological hurdles in trading? The second one that we got is how many hours do we put in to trade a week or doing trading related work? And then the third question that we got is how to deal with the stress that the market generates. All of this is very interconnected, and we're going to pretty much talk about that. And it comes down to a lot of things that we have already talked about in the past, which is preparing yourself for the market.
Two things before we get started. One, I love starting podcasts and also like basing our podcast off questions that you guys are asking, because like that's how we know what you guys want to know. The reason why we started this podcast was mainly just because we wanted to know all this information when we first got into the market. We didn't have anybody doing this, right? You had to pay them to actually get that information. So that's why we're putting all this out there. Going back into all the other previous podcasts that we've shot, a lot of these questions have already been answered. So if you guys go back into those, rewatch them, turn the speed up as well, where you could get through them a lot quicker. There's a ton of information in there for you guys. So again, if you guys want to keep asking questions, send us questions on Instagram. We'll be keep putting them up on our story as well. But it's just how we understand what you guys want to know.
Absolutely. When you're in the markets and you feel like, I have a trading psychology problem, right? Or I have an emotional trading problem. All of this kind of stems from, the three things that we have talked about in the past. And we're just talking about it right now, too, before we started recording. It's either your risk management is off, or your fundamental analysis is off, or your technical analysis is off, right? When you're looking at your emotional trading, or you're looking at your psychological trading, what's your or trading psychology in general, what does all of that look like? You have to realize that your psychology is not just going to stem from out of nowhere, right? You're not just going to open up a chart and then all of a sudden you have like some sort of emotional trading problem. It stems from not being able to find a plan and stick to that plan when it comes to these three things. The first one is risk management. We've talked about how that's 90% of your trading, right? Psychology plus risk management, and I like to kind of group them together. That's going to be 90% of your trading. If you're not able to get a control on your risk management, if you're not able to figure out, what percentages should I be risking at each trade, or what type of setups and things like that, when should I be cutting out my losses? Are you going to kick out like 50% of your trade, or are you going to just do like a full stop loss hit like I do, and keep a tight stop loss? Are you going to take partials? Are you going to let runners go? What does your risk management strategy essentially look like? It can change week to week, where in the last 2 weeks or so, we saw such great volume in the market that your risk management, you could essentially come into the markets with a 2% risk or a 3% risk because the setups were phenomenal. The setups are right there, right?
Mm-hmm.
But in a week like, the current week, where things are starting to slow down from an economic data perspective, you have like central bank heads speaking, but the market's essentially collecting more orders after those massive movements that we have seen in the last like 2 weeks or so. So what does your risk management then look like? You would have to obviously drop down your risk, and maybe you're looking for, and your quality of your trades has to be pretty high, right? But the quantity of your trades is essentially going to drop. Where instead of taking like, 3, 4 trades that you would, in a normal week, in a week like this where it's a slow week, you're probably going to drop that down to 1 or 2 trades, right? Or maybe some days you're not going to be trading and you're just waiting for like a high impact day. For me, for example, I'm not really trading this week until Friday when PCE comes out, because we know that that's essentially the data point that the Fed is looking at in order to make their further decisions. So that's going to be very important, right? The market's essentially going to be reacting to that. So risk management. The second thing is understanding your fundamentals, right? A lot of people, if you're getting started into the markets, obviously you would be starting off with technical analysis. That's a little bit easier than fundamentals, right? But understanding that fundamentals are the drivers of the markets,
Mm-hmm.
that's what you have to, realize that it's going to be very, very important. If you don't understand, like from an economic data perspective, if you're just trading in the middle of the session when there's no economic data coming out, what's really driving the market at that point? Nothing.
Yeah. It's the reason the market moves. Like the technical charts is just a visual representation. And we've gone over that in the boot camps and all that stuff.
Yep.
And I'm sure you guys remember that, but it's the reason why the market moves. So a lot of you guys come into the market first learning technical analysis, and that's great. Like that's typically what you want to do anyway.
Yep.
But use some of your spare time to understand fundamental analysis, study the calendar, understand what's going on around the world. Prime ministers, what are they saying? GDP for countries as well, inflation right now. Understanding all that stuff is super important. But yeah, go ahead with you had a third one,
Yeah,
correct?
the technical analysis. But if you're getting started with fundamental analysis, we have our weekly outlooks where we break down the fundamentals, right? We also do like a live session once a week, so you guys can check that out with fundamental breakdowns that we do.
Mhm.
And then the third thing is technical analysis, right? That's going to be also very important. Within technical analysis, it can get difficult for people, but again, that comes from like hopping strategy to strategy. So we are just talking about when some people they trade price action or they start like putting on indicators with the price action because they don't understand what's essentially happening, right? Or they just want further confirmations of their trade. And then they start putting on like Fibonacci retracements, they start putting on like all this stuff on their chart that at that point when you look at the chart, when you open up, you don't even know what's going on,
Yeah.
right? And not every indicator is meant to work with another indicator. So you have to look at when you're reading up basics of even indicators, it tells you whether you're going through baby pips or anything else, it tells you that there are certain indicators that have to be paired together. That's the only way that you would get a proper confirmation.
Hmm.
You can't pair up every single indicator with each other.
Yeah.
You would never get the confirmation for your
Yeah.
trade, or you would just end up over trading like crazy.
I think another reason why people add indicators from listening to podcasts of other successful traders and then also talking to the countless amount of people we talk to on Instagram, a lot of the reason why people add indicators is because they want to catch a bigger move,
Yeah.
especially if you're a scalper. Like you see people catching 100 pip moves, 200, 300 pip moves on a swing trade, and you're
Mhm.
like, you know what? I need to use indicators to be able to grab those. And they start falling off or going down that road of just trying to figure the market out, adding indicators, back testing, or not even back testing them, but just adding indicators, thinking they know what a Fibonacci is and how to use it, and you don't even know basic price action. You don't know how to read charts. You don't know how to read candles and wicks and understand the way they move and predict where they're going to move. And that comes into that one that ties everything together we were just talking about. I feel like we have deja vu now, where a lot of people trade without an edge in the market. You guys are trading not knowing where price is going to go or not knowing what your confirmations are going to be. You're just waiting for confirmations. You don't even know what they are. You need to have an edge in the market. You need to know what works and what doesn't, right? And that comes into what was that other question that somebody asked us about?
How many hours
Spending.
per week?
Okay, yeah. So there's, if you guys read other trading books as well, you guys will get the same exact answer when it comes to people. Most traders, and you guys know most traders fail. Most of them are actually only trading or spending time on trading when the market is open. They're not doing it when the market's closed. And if you think of any successful business person, you think of any successful athlete, they're all working when the market is closed, even more, I would say. They're
Yep.
only spending a very small amount of time. Like for me as a scalper, I'm only spending 2, 3 hours in the live market, and that's it. 90% of my time, maybe like 70% of my time is spent out of the market, back testing, studying previous trades, studying previous performance, all that stuff. So you guys want to be spending way more time. Just think of what average people do and do the opposite. Most people are not spending that time in the market. They're not spending time on their actual edge or figuring it out. Does this work on the back testing similar or does it not? Right. And doing that over the course of 100 trades or 100 sessions, most people won't do that. And even us saying this to you guys, right? You're still not going to do it, right? There's going to be majority of the people listening to this video that are still not going to do that and still not put the work in. So it's up to you, right? If you guys are actually, if this means something to you and you actually want to accomplish something in the market, you got to put in work outside of the market. So 2 or 3 hours on the charts, and then after that, you go in, back test, study previous trades, do that over the weekend as well. Back test with a buddy of yours, somebody in your mentorship group or anything like that. Ask people what they want to do. Ask people to look over trades and just keep studying your performance and be obsessed about it.
100%. And it's that with everything, it really comes back down to the basics, right? You don't need to have like anything fancy to really figure out like where the market's going to go or like, what's the next move or anything like that. Every time you feel overwhelmed like that, it's coming right back down to the basics. That's essentially what's going to save you. I think that 90% of traders, when they fail, it's also because you get to a point where you start adding all this other stuff onto your charts. You're not preparing yourself for the market, and then it's a spiral down from there.
Mm-hmm.
That's why they fail. They haven't prepared. It's like any other competition that you would get into. You're not going to go into a bodybuilding competition if you haven't worked out,
Yeah.
right? You're not going to go into like some martial arts competition if you've never trained for it. If you're not going to go into, Super Bowl as a football team if you've never played, if you've
Yeah.
never trained,
Yeah.
right? It's the same exact thing. And it's the same thing with like businesses too, where if I haven't prepared, if I haven't done the essential steps for that specific industry to set up my business, I'm not going to go out and start reaching out to clients. It doesn't make sense,
Yeah.
right? If I don't have a website, if I don't have like a business, if I haven't filed for the business with the state or whatever it is, I'm not, and I haven't done the essential research to set up my business. It doesn't make sense for me to go out and start looking into customers already. I need to set that up
Mm-hmm.
first, right?
Absolutely.
And I think what you were also mentioning with like Fibonacci retracements and everything like that is usually when I'm talking to people and they tell me like right off the bat, like price is bouncing off that 0.618 level or whatever it is, I think that's where price is headed. That's the problem essentially there. Because if you're trading price action and you're still coming back and you're telling me like, it's bouncing off of this level and this is why price is headed that way, it doesn't make sense. That's
Yeah.
just a further confirmation. Your first confirmation should be coming from the candles.
Mm-hmm.
And everything, the financial markets are all about data,
Mm-hmm.
right? Essentially, when we're
And
talking about
price.
journaling, price is data, right?
Mm-hmm.
Where has price been, right?
Mm-hmm.
And the wick rejections, where has price been? That's a trail that the candle has left, the
Yeah.
wicks, right? Because that's where price tapped into it, rejected, and then pulled back from there. All that is data. So
Mm-hmm.
why not approach it in an analytical way?
Yes.
Right? You have the
Absolutely.
data, all the data that you need. Approach it in an analytical way. And I'm not telling you to sit there and crunch numbers, right? Those days are far long gone.
Mm-hmm.
But now you're looking at the candles, you're understanding what does a wick rejection mean? What's a liquidity grab, right? What is a liquidity wick on like a bullish candle or on a bearish candle? What does that tell you when price is rejecting in specific areas? You have all the visuals that you need to be successful. So I think that what comes into this preparation and kind of answers like all three of these questions. And the third one was like, how do you deal with the stress that the market generates? You have to be prepared. A lot of people don't do the preparation that's required. They
Mm-hmm.
don't sit, they don't back test, they don't journal. People
Mm-hmm.
are barely starting to get into journaling. And once they do, then they're like, this was a game changer. But this
Mm-hmm.
is stuff that we've been telling you for the longest time.
Yeah. Even better yet, they'll get into journaling, realize how important it is. They'll get on a little winning streak and then they'll forget about it. They'll cut it out. They'll be like, you know what, I don't need this. I'm better off without this. Or the excuse we were just talking about, the excuse we always hear about backtesting and how like, oh, I'm better without backtesting, right? Or backtesting doesn't do good for me with my trading.
Hmm.
Just personally, that's the way I am. Like I don't when I'm on a back tester for an hour or two or way longer than that, I just get all flustered. Like I've heard that so many times and it got me into the thought process of actually like thinking, okay, could certain people be different? Like I could spend 3 or 4 hours on a back tester and be completely fine and not only fine but way better of a trader, right? But then I was thinking there could be some traders that would just confuse them. But I think you're back testing the wrong way. And that would just be like, okay, let's just hop on a Zoom. Let's figure out the way you're back testing right now and see if we could clear that up. Because there's no way you could tell me that more preparation is going to be more detrimental to your career, not only trading, but like to anything. Preparation is what's going to breed you success. So you can't tell me that more back testing is not going to do good for you because it is.
Well, that's the first indicator right there for you then when it comes down to emotions. If you're on a back tester, which is essentially like fake money, but you're still trying to treat it like it's a live account, like it's the live markets. And if
Hmm.
you're getting flustered there, obviously you're going to get flustered in live markets. So
With your
maybe that's
hard-earned
where you
money.
should be controlling your emotions. That's where you should be
Mhm.
figuring out why is this happening? Is your
Yeah.
technical analysis not on point, or you just missed a big move? But then that's when you have to practice that patience.
Yeah.
When you come onto the charts, you're not obviously trading all three sessions, right? You would essentially go crazy because you would
Yeah.
need to sleep during one of those sessions, right? So
Yeah.
if you're not trading all three of those sessions, then in one of the sessions, you're going to see those big moves happening. How do you be okay with that? And
Hmm.
that's a good thing about like Forex in general, where you could catch, a move just sinking down, dropping down like crazy, and then you could catch like the opposite move right after that, where price
Hmm.
is pushing right back up. You can trade both sides. But how do you be comfortable with that? How do you be comfortable with losing or not even losing, but like missing trades, right? Or how do you be comfortable, yeah, with losing trades as well? We talked about like handling losses and all of that. So it's being comfortable with these things on a simulator before
Mm-hmm.
you jump into the live markets. All you really have to do is replicate the same thing into the live markets,
Yeah.
and you should be winning
Yeah.
consistently. If you are winning consistently on a simulator. If you're
Yeah.
not even winning consistently on a simulator, or if you're not able to gain like, at least a 5% equity increase per week, which is just 1% every day, even if you're trading. Majority of your trades, if you're going for 2 to 1 or 3 to 1 or more than that, you would be easily able to hit that 5% in maybe 1 or 2 trades.
Mm.
It's not that big of a percentage,
Mm-hmm.
right? So if you can replicate the same thing on a simulator, then you should be able to do the same thing in the live markets.
I've always told people that's where you have to treat that like a live account. But at the same time, I always use the sports analogies, but like if you're a quarterback in the NFL, you're in practice, you use that practice to see where you can fit the ball into tight windows, or you're testing DBs, you're testing linebackers and stuff like that. So like there is that teetering, I guess you could do when it comes to your back testing, that like, all right, you're gonna try and move on here that you normally wouldn't in the live market, and you got to be able to find that balance. There's a lot of different finding balances in the trading markets, especially when you get more and more experience when it comes to sticking to your plan, but also being able to go off the road a little bit with your plan,
Mhm.
knowing that I've seen the setup before over and over and over again. Now I'm getting ready to take this setup now in the live market. Now, obviously, it's not on your trading plan just yet, but you back tested enough. Now you're starting to see it. Now you get that intuition with your pair, and you get to take it. But just find that balance when it comes to back testing. Treat it like a real account. Do not rewind after taking a loss. Journal the trades that you're taking on there as well.
You got to be prepared and you have to find that edge, and you always have to consistently be learning. So when you're looking at, just outside of trading in general, when you're looking at successful businesses that have been, around for a very, very long time, for decades, it's because
Yeah.
they're consistently adding new stuff to their businesses. That's
Mhm.
consistently learning. Imagine if Apple, for example, stuck with that their iPod Touch, right? And their iPhone
Yeah.
1, and they're like, we don't even want to move past that.
Yeah.
You would not be having the new iPhones that you have right now, or the new technology that you have right now. Same thing with like IBM, same thing with like Intel, same thing with like any other company. It's
Or
because they
before that.
keep, yeah, and they keep adding stuff to it. That's continuous learning. It's the same thing with like any other business owner. You have to consistently be learning on a daily basis, and always adding to your business. As
Hmm.
a trader, you're doing the same exact thing. You always want to be learning. That could take so many different forms. For me personally, started off with the basics, of course, technical analysis, fundamental analysis. Now, within that, understanding fundamental analysis, you start off with like the major things, which is inflation data. You start off with employment data. You start off with, central banks and interest rates and all of that. And then you start breaking it down into micro data, right? What does that essentially mean? Break that down into like, what's the market sentiment look like? Right. And then from a technical analysis perspective, start looking into scalps. How do you take a scalp? Right? And then how you turn that scalp from like a 1 to 1 to maybe a 2 to 1 or 3 to 1. How do you turn that into a day trade? How do you turn that into a swing trade? How do you look for longer position trades? Things like that. There's always something to be learning in the markets. So I
Yeah.
think to answer all three of these questions, the main thing here is preparation and just continuously learning.
Yeah.
So always
100%.
do
Always.
your preparation, and then trading or trading related work, we talked about back testing. That's going to be your number one priority. We do our simulation sessions together on YouTube. That's one way. If you don't have Soft4fx, come onto YouTube with us on Fridays, take some trades with us, and ask your questions there. That's for you, basically, that we're doing. Free
Hmm.
simulation sessions right after
Hmm.
the market closes. Hop on there and take some trades with us, right? Or see how other people are taking trades, and then try to understand what's happening in the market. Why do we take these trades? Why do we, take a partial at a specific level? That's your preparation. And trading related work essentially looks like your pre-trade analysis, and then going through, like, if you're already in a mentorship program, go through their webinars, go through their simulation sessions, go through their trade updates. If you're trading on your own, you got a bunch of books that you can go through. You have so much stuff on both of our YouTube channels that you can go through. That's what your trading related work would look like. Keep
Hmm.
educating yourself.
Yep.
Right. So preparation is always going to be the first thing with your simulation sessions and everything like that. Work on your discipline. If you're getting flustered in a simulator, you're getting flustered in the live market, right? And that's
Hmm.
how it is. Use that simulator and use that simulation time to figure out what's wrong and how do you fix it. That's your gem. Think about it like that.
Hmm.
Those are the straight answers for you guys, where you have to from a psychological perspective, how to deal with the stress that the market generates, you have to prepare. If you're prepared, if you can visualize like this is a setup that I'm looking for, what's the need for stress when the market opens
Mhm,
up?
mhm,
If the setup's not there, it's not there.
mhm.
There's no stress. Don't
Stay
take
out.
the trade.
100%. And to your point, what you were just saying, the amount of traders, and I've personally used to do this when I was just starting out. And this is gonna be a lot easier for you guys now that MetaTrader is not on iPhones anymore. But do not open your phone and open MetaTrader, see a setup, and just take it right away. Right?
Yep.
You cannot be doing that. Too many people I've heard from, or listen to podcasts, my own experience as well. Too many people I hear doing that, and all of a sudden you just blow your account, or you blow a big percentage, and then you got to spend a week or two making that back. It's just going to set you back. You need to do a full analysis, top-down analysis, either on your computer or on your phone if you can, and don't just jump into trades.
Yep. So, I mean, if the phone is what you really have, then you could download TradingView,
Yeah.
right? And you can do it on there. You can do an entire top-down analysis there. You
Yeah.
could do it on like, whatever broker platform that you have. If it's not MT4, then something else. But the point being is do your entire analysis before you hop into a trade. Don't open up your phone. Don't open up a 5-minute or 15-minute chart. See like some sort of break and retest without understanding what's the full picture and then just hop into a trade. That's how
It'll
you
kill
lose.
you.
That's exactly how you lose.
100%. Now, honestly, I think this is, if not the best, but one of the best podcasts we've done, because we've literally given you guys all the answers that you need to be successful in the market, right? Going over discipline, going over preparation, finding your edge in the market, what you need to do to be successful, doing the opposite of what most people do. Now,
Yep.
again, it's just up to you guys to actually implement this and actually take it to heart and actually do it and get obsessed. Get massively obsessed with your trading skill. Get obsessed with your performance in the past. Get obsessed with your goals. Get obsessed with everything. Make sure that this is your number one love, and you're not doing anything until you master this.
So I hope this was helpful for you guys. As always, we're going to continue posting some of these questions on our Instagram. So, if there's anything particular that you want us to go over, comment below or just hop onto our Instagram and let us know like what else do you want us to cover. But I hope this gives you guys a lot more clarity because we pretty much just gave you the answer right here. How do you deal
100%.
with it? And that's how you're going to do it. Now it's really up to you to implement all of that. So as always, we will see you guys next week. But if you have any questions, then feel free to reach out to either of us on Instagram. Mine's at SharmaFX, and then Stefano's is Stefano'sFX.